what we went through in 2022 and 2023 is your classic mid-cycle pause. Yeah. The economy adjusts to the higher rates and the higher energy and commodity prices. It went through that adjustment. Manufacturing slowed down. Now we're coming out of it. And is this thing any different than previous cycles? No.
But Jeff, if you look at the rates expectations for the Fed, right, higher for longer, and I know this is because growth is wrong, but does it have a harmful effect on commodities at all? Looking
By the way,
forward.
this is why you want to own commodities in this environment, because if you don't have a situation in which you're raising rates because of strong underlying growth, means commodities are going higher, and that's what's going to force their hand to raise rates. And if they do cut rates, you're adding more liquidity into the system, which means higher commodities. So commodities are a win-win in this situation. That's why they nearly always outperform all other asset classes in this environment.
But I'm looking at the IEA. They're predicting further slowdown in oil demand growth next year to just 1.1 million barrels a day, right, as we get closer to peak demand. Do you agree with that assessment?
By the way, when we look at late cycle commodities, there's a really important point. It's not the growth that matters, it's the level that matters. And why do I say that? Is because as the level of commodity demand goes up, it stresses the underlying supply level. So yes, the growth rates are going to slow.
Right.
And that's what you happen to late, but the level could continue to grow, stresses the system, puts upward pressures on prices. So that, and by the way, the equities, which are tied to growth rates, they begin to come down. So this is what I always argue over and over with commodities. They are tied to the level of activity, while financial markets are tied to the growth rates of activity, which is why you get the outperformance.
OPEC Plus has kept supply tight.
Yes.
Is this about to backfire?
No, when we look at where, well, first of all, everybody's talking about all the spare capacity in the system. It sits in Saudi Arabia and UAE. Right. That's it. And they have more market power today than they've ever had because of a lack of investment in many of the different non-OPEC countries. And yes, you're probably going to respond back that rapid growth in the U.S., but compared to what's going on more broadly, it's relatively small. And then I think the other issue that gives them market power is that you have inelastic demand, because we've taken out all the low-hanging fruit. So that group that sits on that spare capacity has more market power today than they've had since the existence of OPEC.